All right, today we're talking about Intuitive Surgical, the company that basically pioneered robotic surgery. But we're not just going to talk about the cool tech. We're going to peel back the layers and look at it as an investment. What makes this company tick, and what could the future really hold for its stock?
So this is the big idea, right from the company itself. And this isn't just some marketing slogan. It's ambitious, sure, but it's the core philosophy that built a company worth billions and completely changed what a modern operating room looks like.
So here's our game plan. We're going to look at what Intuitive actually does, then dig into how they make their money, which is fascinating. After that, we'll cover the bull case and the bear case, and finally, we'll see what the analysts think it's all worth.
All right, first things first, let's start with the basics. Who exactly is Intuitive Surgical, and just how big of a deal are they in the world of medicine?
Just look at this number for a second. Over 17.5 million. That's how many surgeries have been done using their Da Vinci robots. That's not a typo. It's just staggering. It really shows you how this tech isn't some niche thing anymore. It's a core part of modern healthcare.
And it's not just in one country either. Their reach is global. Over 11,000 of these systems are sitting in hospitals in 74 countries. And think about this. Each one of those isn't just a one-time sale. It's a permanent foothold inside a hospital, creating this massive interconnected network all over the world.
So how does this thing actually work? Well, it's a pretty genius setup. You've got a surgeon sitting at a console, kind of like a high-tech video game. Their hand movements control these incredibly precise robotic arms that are right there with the patient. The whole point is to make surgery less invasive, give surgeons almost superhuman precision, and ultimately help patients get back on their feet faster.
Okay, the technology is amazing, right? We get it. But for an investor, well, the real magic might just be the business model. So how does Intuitive turn these incredible robots into such a profitable machine?
Now, you might think it's all about selling these multi-million-dollar robots. And yeah, that's part of it. But honestly, that's not even the main event. It's really just the opening act. This right here, this is the secret sauce. A massive 84% of their revenue is recurring. That means it comes in automatically, year after year, long after the robot's been sold. For anyone looking at a company's financials, that kind of predictable, reliable income stream is basically the holy grail.
So where's all this recurring cash coming from? Well, it's mostly three things. First, the single-use instruments and accessories they need for every single surgery. Second, the very profitable service contracts to keep these complex machines running. And third, they're leasing more and more of these systems. It's the classic razor and blades model, just on a massive scale. The more a hospital uses the robot, the more money Intuitive makes. It's a brilliant cycle.
Okay, so you've got this amazing tech and a killer business model. That leads us right into the optimistic view, the bull case. What's the argument for why this stock could have a lot more room to grow?
The bulls have a lot to be excited about. First off, there's the brand new Da Vinci 5 system, which is a huge deal. They're also making a big push into untapped markets like India and Brazil. Plus, they're expanding into new types of surgery, way beyond their traditional stronghold. And here's the key. The clinical data keeps backing them up, showing better outcomes for patients. And it's working. Get this. Procedure growth was up 17% last quarter. That's huge.
And this optimism isn't just talk. You can literally see it in the high-end forecasts from analysts. The bulls are looking at these charts, at that steep upward curve, and they're betting that both revenue and profits are going to climb aggressively for years to come. This is the growth story they're buying into.
But hey, it's never that simple, is it? For every bull case, there's a bear case. We have to be balanced here. So let's flip the coin and look at the very real challenges that could get in the way.
So what are the bears worried about? Well, a few big things. For one, money's tight. A lot of hospitals in key places like Japan, China, and Europe are facing serious budget cuts. Then you've got trade uncertainty and tariffs, which could really squeeze profits. There's also a new threat popping up: companies selling cheaper, remanufactured instruments. And finally, getting new tech approved by regulators around the world can be a really slow and painful process.
And just like before, you can see these worries reflected in the numbers. This is the other side of the forecast. The low-end estimates paint a much flatter picture. See how those revenue and earnings curves lose their steep climb? This is the scenario where all those headwinds we just talked about really start to bite.
Okay, we've seen the good and we've seen the bad. The bull arguments and the bear arguments. So what does this all mean for the stock price? Let's put it all together and see how the pros on Wall Street crunch the numbers.
So, after weighing all the pros and cons, where does Wall Street land? The consensus, or the average fair value target, comes out to $582.10. Now, depending on the day, that suggests that, on average, analysts see some pretty significant upside from where the stock is trading.
But wait, what has to happen for the stock to actually get to that price? Well, to agree with that number, you have to believe this, that by 2028, Intuitive will be pulling in over $13 billion in revenue, making almost $4 billion in pure profit, and you have to believe the market will still be willing to pay a super high premium for it. We're talking a price-to-earnings ratio of over 70. That's a lot of things that have to go right.
But here's the real kicker. That average price of $582 is kinda misleading because it hides a huge disagreement. The most bullish analysts think this stock is going all the way up to $685, but the most bearish, they see it falling to $350. That massive range tells you everything you need to know about just how much uncertainty there is about this company's future.
So, what's the bottom line? Ultimately, it comes down to this. Intuitive Surgical is a phenomenal company with a powerful, smart business model. The market knows this, and because of that, its stock is priced for perfection. There is very little room for error. So the multi-billion-dollar question for any investor is simple. Can they actually navigate all these real-world risks to deliver that near-perfect future?